This is Trading with Artists and Will. Welcome back. I hope everyone is having a great 3-day weekend and happy Memorial's Day. Make sure you're following if you're not already. I'm going to be posting trade reviews and a lot more educational content. Lots of good stuff in the pipeline. With that in mind, for the week of May 27th, I have 5 names that are looking really good for this week that I'm keeping on my watch list. Let's get started. And the first thing I want to really touch on is just how technical analysis as well as what's actually happening in the world usually tend to coincide and actually fit together like a really nice puzzle piece. So what we're seeing on SPY and the indices is that we needed to defend this gap fill that was made on May 12th, and we were able to successfully do that. But it still looks really weak because we closed under this 8 EMA. And remember, when you want a trending market, you want price to be above this 8 EMA level. However, over this weekend, Trump did announce that there's potentially news with the EU and reaching some type of resolution/deal for the tariffs. And we saw futures actually gap up. And that, in some defense, let's assume this holds, is a great defense of this gap fill and likely showing that we're going to continue forward in this trend in the upwards direction. And it's really interesting because if you look at NQ here, which shows you the strength of tech, we're starting to see a really nice structure develop where there's a lot of consolidation and we're holding the 8 EMA, and it likely looks like we're trying to build a flag and potentially breaking it soon too. I think for this upcoming week, the biggest news that you really need to look out for is going to be Thursday and Friday. FOMC minutes is going to be something that's likely going to cause a little bit of just intraday volatility. All it is just things that the Fed has already said. They're just releasing their notes and a summary of what they've already spoken to everybody about. For Thursday, we have our GDP, and then Friday, we have core PCE and personal income and personal spending. Now, let's get into the watch list for the week. The first name is going to be Tesla. I really like the flag that is developing on the daily time frame here. And if you also look at the weekly, we ended up printing an inside week. What I'm really watching for is a break above this 350 level to target the highs of around 366 that was made from this candle on February 19th. Once we're able to break that, TP2 will likely be set at around 380 all the way up here. The contract I'm looking at is going to be the June 20th 400 strike. It's going to be the most affordable, but also just good range for the open interest as well. But the biggest thing is we want to see this flag actually break to get that confirmation and then enter this contract. The second name is going to be Carvana. I think it's a sympathy play with Tesla, as you see a very similar structure that we're flagging and riding up against the 8 EMA. This shows you that there's a continuation of this trend, and you have to look at this, that there's 7 trading days where we've consolidated and we've gone nowhere. This shows you that this is really range bound, and even though that we've been range bound and chopping, we're upholding these levels, meaning that buyers and sellers agree at this high level. It's almost like a pit stop and this flag, and once this breaks, price will accelerate further up. So what I really want to see is a break past this 311.88 to target the highs of 345. If you go on the weekly time frame here, it looks like the breakout is actually just starting to break out, as we just recently broke past this 293 local high. And this 345 is targeting from this wick of this weekly candle from September 13th, 2021. I already have a position on Carvana, but I'm looking to add more into the June 20th 330 calls once we break this 312 level. The third name is going to be TEM. This is pretty interesting in terms of technical analysis because we see a trendline breakout that happened on May 7th, right after the earnings report. We broke out, ran a bit, and then we started to kind of fail the 8 EMA and we're starting to pull back. But interesting to note is that on Friday of May 23rd, even though we did end up gapping down, we actually got bought back up immediately up. Coincidentally, this is actually at the cusp of this trend line, which shows you this could potentially just be a retest of this trend line breakout. So what I'm looking for is a break of the new trend line that we're starting to form, and a break past this 66.5 level, which is this resistance point where it failed to make a higher high. So once we're able to break that and hold above, I'm looking at the June 20th 65 call. The first TP is going to be at the highs of this 72 level, but from there, I really do think we can start running and actually pushing forward more. If you go on the weekly time frame, you're actually seeing that all we did was just test the 8 EMA, and we actually didn't even break the lows of this previous earnings weekly candle. And once we're able to break this 72 level, I really want to target this upper 90 level. I think it can accelerate and just be one of those exponential mover type of names. The fourth name is going to be DoorDash. We've been looking at this one for a while too, and I really like that we're starting to break out of this trendline of resistance on the weekly time frame, starting to peak out a bit, and we're starting to see volume actually is beginning to accelerate. The reason why we didn't enter this last week is because we didn't close above this earnings weekly candle, which is at around 207.25. If we go down to the daily time frame, this is the entry point. I want to see a break past this wick that was made on that Wednesday of May 21st at around 209.56. Once we're able to break that again, which I think we will do probably in the next week or two, I'm looking to enter the June 20th, either the 210 call or the 220. The 220s are obviously going to be a lot more affordable, but the delta is not as favorable. So if anything, I would look for either the 210s from that point just to be extra safe. But when we're looking at the weekly time frame, we're seeing that we're starting to break this out. This move could easily test these highs of around 215 and then actually get that 220 contract in the money. And if you zoom all the way out, and let's go to the monthly time frame, all you see is that this is starting to become kind of like a cup that is forming to eventually form that handle. The next target would honestly be the highs of these two wicks here at around 250 on the monthly time frame. If you go on the weekly here, you'll see that this is exactly where we kind of wicked and had that resistance. If you want to play it safe, you can move it down to near this 245 level as the first TP if we're actually able to get there at some point. And lastly is going to be RGTI. This name is starting to really accelerate with heavy volume, and we're actually trying to break this 14 level, which is where it struggled a lot in the past. You'll see that this was a huge resistance point from this range in January to February, where we really failed to have any single daily close above this $14 level, despite wicking past it several times. So this tells you that this $14 level is likely a very big contention point for buyers and sellers. But once we're actually able to have a daily close above this, I'm really looking for a continuation move into this gap fill from 16.22 all the way up to 17.58. I'm looking at the June 20th 15 calls, and honestly, the first TP can easily be at this beginning cusp of this gap fill, which is a 15% move all to 16.2, and then eventually that full gap fill would be that 25% move. As always, thanks for hanging out with me and reviewing my watch list with me. Good luck in the markets this week, and I will catch you guys later.